We're coming back to Nigeria, where investing in US dollar-based managed funds is the new Hail Mary for Nigerians of top, middle, and lower classes, as they see the local currency depreciate at least by some 12% since 2022 started. Afrinvest is one of Nigeria's investment banking group with a registered dollar-based mutual funds on Broad Street. So I asked the investment strategy manager at Afrinvest Asset Management, Temitope Omosuyi, to join me for a chat to the latest development. Thanks for coming through. Good evening. It's good to see you.
Thank you very much, Bosun, for having me.
Tell me exactly what trend you are seeing right now in dollar-based mutual funds in Nigeria in recent months, at least going by Afrinvest Dollar Fund.
All right. Thank you very much for having me once again. It's quite interesting to know that, Nigerians are finding dollar-dominated investment, quite attractive. Dollar-denominated assets are now becoming, a point of contact or safe haven to so many people because of what we are saying to inflation. You rightly mentioned that this year alone, the Naira has depreciated by over 19%. So, and look at what is happening to inflation currently at over, 18%. But if you look at the best you get in the financial market, particularly government bond, the best you can get on the longest end of the bonds curve is 13%. So if investors, which they are currently doing, if they just stick with dollar-denominated assets, by now, plus the return of over 5% this year and depreciation of about 19%, they are actually up by about 24%. So they may find it very attractive. In fact, we noticed that in Afrinvest that investors are really embracing dollar fund. And if you look at the market at large, in terms of net asset value, if you look at the market in terms of the share of dollar denominated assets against other financial asset classes, from equities to local bonds, you observe that the share of dollar assets has increased substantially. For instance, if you look at the market, dollar-denominated assets account for about 22%. Currently, account for about 22% of the mutual fund AUM, compared to its level at about just 20% in 2021. While other financial asset classes, in fact, equity has dropped from about 4% to 3% in terms of the share of equity in the total mutual fund AUM. And if you look at money market as well, it has also it has increased, and I'll go into that shortly. While for bond, it has actually declined from about 29 to 24. So the reasons are not far-fetched, because of inflation. And in the period of uncertainties, investors usually focus on two financial asset classes. One, they look at money market. The second one is that they have to look at dollar denominated assets. For money market, they are able to stay on liquid assets. They are able to stay on short end of the curve in case, especially if it's noticeable that the economy is volatile. And Nigeria, we are talking about a pre-election year where there are a lot of uncertainty. So investors will rather do money market instruments. And if they want to go into other asset classes, they would rather do, dollar denominated assets. And this will definitely help them hedge, uncertainty. So, and we think that the trend will actually continue going forward, despite the fact that even look at the market at large, AUM of the market has gone up for the mutual fund by about 6%, but for dollar-denominated assets alone, it had gone up by over 12%. So this is quite reckoning and remarkable. And we think that the trend will continue going forward. Thank you.
So the average rate of return in dollar-based funds, what about risks such as inflation, depreciation, and interest on such funds? Because if you look at the performance of the US dollar as well at the global space, and the rate of interest rate and inflation in developed economies, especially in the US, and expectations that the US Fed will continue to raise rates. At least that's what we have on the short-term horizon.
Yes. So I think for dollar denominated assets,
So we apologize. We're getting that a bit of so again we have a bit of internet connectivity, a bit of a problem there. Sorry, Temitope Omosuyi, investment strategy manager at Afrinvest Asset Management. Sorry about that. You were just talking about how the Nigerian fund in dollars has been the new wave of Nigerians here. So my last question to you, if I could just take that all over again, is about the risks that are external when you look at interest rates in the US, inflation in the US as well as what other risks they need to face. That if you are investing in dollar fund in Nigeria, what I should consider?
So I think you should consider your entry points because, for investors that have entered the market quite early, they are better off. But currently, exchange rate is very high. So if you're entering the market at the current exchange rate of, 680, 690, you are not quite sure that there's going to be further depreciation of the currency. And that may not really give you the desired return. But for investors that have entered the market, say December last year, they are already up by, over 20% when you factor in exchange rate gain plus the return of the market. However, we know that if you are looking at long-term investment, because it's been recorded that in the last 10 years, Nigeria currency, the Naira, has been, has depreciated by over 100%. So for a long-term investor, it's a good play. It's going to hedge against, inflation, and you don't even have to worry so much about interest rate, outlook as well, because investors, investment managers and markets will adjust to interest rate outlook. However, for exchange rate, you may want to be a bit worried, because of what is currently happening in the market. There's a bit of uncertainty in the market. Rates had gone up substantially, and you cannot so justify the current rate in the parallel market that is over 680 by fundamentals. If you go by fundamentals, you cannot justify what we have, which means investors have to exercise some caution, except they are looking at long term. But if they want to stay on short term benefit, it may be a bit tricky, because in the twinkle of an eye, once the CBN comes into the system to support the Naira, we could see a bit of appreciation in the currency. However, over a long period of time, because of the differential in inflation between Nigeria and the US, there will still be a level of exchange rate pressure. So the play is actually for long-term investor and not for short-term players.
Temitope Omosuyi, investment strategy manager at Afrinvest Asset Management. Thank you so much for your time, for bringing some dollar conversation into the show tonight. Thank you so much.